Well, good morning, everybody, and welcome to another edition of Develop Your Edge with Anthony Crudele. I'm your host, Michael Burke. Today is Thursday, June 15th. I'm standing in for Tom Schneider, who is standing in for Jim Cagnita this week, who's on vacation. But before we get started, please keep in mind that the following presentation is for educational purposes only. All of the symbols and ideas discussed are for educational purposes and are not recommendations. Past performance is not indicative of future results. Futures trading is not suitable for everyone. If you are going to trade futures, you should be trading with risk capital, and futures carries a high degree of risk, and you could lose more money than your initial margin. So, Anthony, great to see you again. Thanks for being with us. How are you doing this morning?
I'm doing great, Mike. How are you?
Good, good, good. Weather's great here in South Florida. We've gotten some rain the last few days. How about over there?
Now, on the West Coast, it's actually been pretty dry, but we could use it. And I know that we're getting ready to get hit with rain every day at 3 o'clock Eastern.
Yeah, I love the topic today. We're going to kind of clear the fog away of the difference between swing trading and scalping. And let's get started.
Yeah, and I want to start with a little bit of a conversation between you and I, because before the show was beginning, you and I were talking about something that I think is really important. Also, everybody, this is going to be a two-part show, and you're going to be able to download everything that I show in here when it comes to scalping versus swing trading. It's really about deciding when to choose to trade one of these. Now, some of you may say, I never want to scalp, and some of you may say, I never want to swing trade. But as a day trader, I always look at it like this. There's really just two methodologies that I would trade, and that's scalping, and that's really short term. I'll go over what that is. And then you have swing trading, where you're going to come in and you're going to look for a position to hold throughout the day or throughout multiple days, and ultimately price will get you out. But to have a conversation with Mike before I go and look at today's really focusing on scalping, as I mentioned, this is a two-part show. Mike, when you first started and when I first started in this business, scalping was, I'm going to work the bid, I'm going to work the offer. You were basically a market maker and you're trying to make a tick or a couple of ticks. Nowadays, I see a lot of people talking about scalping when really that's not the form that I was taught. Pit traders scalped. We tried to, we bid 20s or halves to sell 70s or 80s. We tried to work our way in for just a few ticks with size, and we would burn out for a few ticks of a loss. That methodology really in today doesn't carry over because, number one, computers are too fast. You have electronic trading, which is what everyone is doing. Obviously, we're not in the pits anymore, and you have pricing, which has gotten so high in a lot of these markets, the S&P, NASDAQ, Dow, that the ranges are bigger. And I don't think that people account for this, because when we were scalping, 20 years ago, when I started 20 plus years ago, the market's ranges were much smaller. And so therefore a couple of ticks wasn't as big of a deal. Same with the stocks. Now you see what NVIDIA moves, or Apple or Tesla, obviously the S&P, NASDAQ, Dow, and Russell, they're moving so fast that trying to make a couple of ticks is what I usually say is the path to the poorhouse, because even if you're doing well, you're ultimately just churning commissions, you're churning fees. And that's just not a successful path. And so, Mike, just talk a little bit about you and I think how that's really evolved.
Yeah. So, when we first started, and it's hard, it's hard to imagine it now, but, stocks traded in 16ths, not in pennies, right? So you really, if you think about that, that's 6 1/4 cents. So you could buy at the bid and sell at the ask and make 3 or 4 cents after expenses. That concept was called a direct access, as I recall. So you had this direct access. Stocks were trading at a 16th, and there was an opportunity there. As soon as they went to pennies, that really went away, because to your point, first of all, some of these stocks are moving so quickly that it's really you're not really able to pick off bid and asks anymore. The market, you get into a trade and the market could move and you could be upside down much more than you were expecting to make on as a profit. So things are very different now, and I agree with you. I think that the market is too volatile. You don't really have the same direct access, and having penny increments just doesn't work for the type of scalping that you and I started with.
Yeah, exactly. And I'm actually going to go and start and show my screen. And my goal for this 2-part episode, everybody, is number one, to showcase what scalping is so you understand it. And although a lot of my pit trader friends and even a lot of my bond electronic trader friends probably will disagree with it, and a lot of the bond traders will still scalp, because if you trade the 10-year, 2-year, 5-year, maybe even 30-year, you have tighter ranges. And so therefore they'll scalp, they'll work the bid, they'll work the offer, they'll do that. But when you get into equities, metals, energies, it's just too difficult. And the goal is to showcase what scalping is, identify it as a style, and I will show you the way that I use NinjaTrader to scalp. And primarily today, we're going to be talking about the E-mini S&P in gold. So first off, when we look at this, and remember, these slides are available for you to download. You will see a link on my website. My membership is free. You can go there and you can download the chart decks for all of the Develop Your Edge shows. And you'll also see in the YouTube description. And what I want to talk about is really just the basics of scalping. Scalping is just short-term price movements. Right. And in the original way, as Mike and I discussed, we're not going to talk about this much more, was for ticks, risking ticks to make ticks. Now I think it's really more of a points for points. And that's ultimately what's changed. And so it's still very short-term quick trades with tight stops. And a lot of you will look at these as bracket orders. And I think personally, one of the things that I'll talk about today is just putting a bracket order in for this, because if you are going to identify as a scalper, you don't want to be moving your stop too much. It's really set in stone very quickly right away. You're looking at, a couple of points of risk for maybe a couple of points to 4 points. And we're talking S&P here of profit. And I'll talk about some styles that I use for that. And it's just really more effective in certain market environments. And right now, the number one thing that I have been doing is scalping. And it's because I've just taken my size down. I'm trading smaller. I even put a tweet about this morning. Right now, when markets are volatile, you have rollover in all of the markets, right? You're rolling over in interest rates, currencies, equities, and it's just messy. And rollover, I've talked about this in previous shows here, is when you go from one contract to the next. Your technicals are going to change. You're not going to have, the same 50-day moving averages. You're not going to have the same carryover from one day to the next and the way that they look, because right now you're going to be rotating out of 1 month and you're going to be rotating into another month. And I'm not talking about necessarily you as a trader carrying your positions from one to the next, but a lot of these bigger open interest traders that have these open positions, they're going to move them from 1 month to the next. And so therefore it supersedes technicals. And I mean that because the volume is things that they have to do, not things that they want to do. So and I like those types of scenarios for scalps, because you also have CPI, we've had Fed, you have all these uncertainties. So what you're going to see today in the charts is areas I look for when traders get trapped. And I'll explain what that means. This is just another quick summary of what it is and that I do. And I'm going to show you with these in the charts. And once again, it's written here, so you can go and download this, on anthonycrudele.com. It's very simple. You go there and just grab it there. And it's just kind of go refresh everything that we're going to talk about today. The two indicators that I'm going to show you when we get to the charts is regular trading hours, anchored VWAP. I've done this a lot with Tom and a little bit with Mike. Love the regular trading hours, anchored VWAP. I almost only look at regular trading hours when scalping. And I say almost just because I'll look at the overnight a little bit to see kind of what's coming into the day to gauge what I'm going to do. But majority of the information I'm going to take is going to be taken from the open. And then the other indicator I'm going to use is going to be cumulative delta. And cumulative delta helps me look for what I call just squeezes, right? I mean, today is going to be actually a little bit of a difficult day. I took actually a couple of scalps long, and I actually got stopped out of one right before we came in here, and I'll show you what that trade was. But it's the cumulative delta helps guide us on scalps, because with cumulative delta, it'll show you what the net volume is between buying and selling. And so one of the things I want you to think about today when we get to the charts is, if you have a day where the market is going up and you get a lot of buying, you want to look for times when markets are selling into support and the market can't go through support, right? Those are the times when you start to look for squeezes. right? Because anytime you have a trend and you want to see how the market reacts to a level, you're always going to look at it from the perspective of, can the sellers push through an area or can the buyers push through an area? And so cumulative delta gives us an inside look of what's happening in the bars versus just looking at a candle or a bar chart. And so that is really the overall view of what we're going to look at before we go to the charts.
So Anthony, one of the characteristics of trading during the day is that there's more volume at the beginning of the day and there's more volume at the end of the day. So do you look at segmenting your trading or looking for different kinds of trades during the day, or is it purely the opportunities that appear regardless of the time of day?
I would say that when I'm scalping, a majority of the scalping for me is going to be at any point I see the squeeze. There's no time. For swing trades, which I'll get into a little bit more, like I said, next week, it changes a little bit because I'm looking at more of bars closing, one of your shows, and things like that. And so when it comes to scalping, it's really, for me, just about the number one thing I look for is the squeeze. And I want to explain what that is. And maybe we'll go right to the charts, because what's interesting is I'm actually looking at a trade that if I was trading live right now, I would show you that I would be taking this trade. And let's go to the chart here. And the first thing that I look at when I look at I talked about how I said I almost exclusively look at intraday information. Here's the 60-minute chart and a couple things that I look at coming into the day. Number one is I always look to see where we are with the Bollinger Bands. I didn't put this in for the scalping tools because this is not really something that I'm using to help me scalp, but it's helping me understand what's happening in the market going into the day. And when you look at the market, as you can see here, I'm going to actually hit my F6 key, which allows me to draw a horizontal line. And you see this horizontal line, which comes in at this old peak. And so what I've talked about this is, in the past, is that this is like unfinished business. And I even can move this up to this peak right here. And then when the market gets to that point on a 3 standard deviation Bollinger Band, it's kind of reached, I don't want to say it's reached a peak. It's reached a level that you might say to yourself, okay, this area could pause. Now, that doesn't mean intraday that I'm still not going to be long. That doesn't mean intraday that I'm going to be short, but it's something that I'm aware of on the bigger picture that you got to bring reference into the intraday. And because the bigger picture is always going to supersede the short term, even though we're focused on the short-term charts, you want to have the perspective of what's happening on a 60-minute or a daily. And to me, however you do that homework coming in, that doesn't really matter to me, to be quite honest with you. That's a preference. And I like to look at where we are with the Bollinger Bands, and I like to look at where we are just day to day with the overnights and where are we relative to the VWAPs. And so it's just one of those things that I'll do. I look at it almost as a glimpse. Now we're going to get into intraday. I'm going to go to a 3-minute chart. And this is actually one of my favorite trades. And we're actually getting it right now. And we actually just passed it. So first off, I'm looking at regular trading hour sessions. That's the RTH. When you open up your NinjaTrader platform, you can click on your bars and you can go to the, what session do you want? And I want regular trading hours. Okay. So it's 9:30 Eastern, 8:30 Central, or whatever time zone you're in. I want that. Then what do? I just use regular bar charts. You can use candles, whatever you want. To me, it doesn't matter. Then I highlight the opening 3-minute high and low. I've talked about this to nauseam almost on these shows. I like to see the opening range. I look at the first 3 minutes as the opening range. Then I anchor the VWAP directly to the session. And when you order flow VWAP to that, I'll actually double click on this because I want you to see the settings. I have it set to the session, which is the RTH, which is the regular trading hours. I also have it calculate on each tick. Anytime you're using any indicators, in my opinion, you always want them to update to the most current. And so on each tick is going to update to the most current. And so when you're looking at an order flow VWAP, I want it to constantly update, right? And so I also have the 1, 2, and 3 standard deviation bars. Now, these are very important because these standard deviation lines, I said bars, they're lines. What they're going to do is they're going to be my guide to identifying zones and areas where I can take trades. And this is the most important part of when I'm scalping because I look at everything in zones. And what is the market doing within that zone? What is the cumulative delta, which is right here? And I also threw in an RSI. The RSI is just an additional indicator, overbought or oversold. I look at it as a glimpse again. Not necessary, but I'll explain how I use it. First off, we start the day where the market goes up and up and up, and you can see the deltas just stair-stepping. At this point, I'm recognizing that what? Number one, the anchored VWAP is above the opening 3-minute high. The market's going higher with delta higher. Anybody who's anybody saw the action this morning, and if you waited, you noticed that today has the potential to be a trend up day. And the reason you do is simply because volume is up, price is up, and you're getting above, VWAP is getting above opening price action, and everything is trending higher, right? And so you really are at this point, anytime you're looking to fade something, you're just fading strength. And even if you're scalping, it's a weak-handed position because you're going against what volume and price is doing. So that's number one. So my initial thought is wait to see what we do around the standard deviation lines and the VWAPs. So what do I look for? First thing that I look for is anytime that the market comes back to a standard deviation line or a VWAP, what you want to see is you want to see volume get accelerated. And I'm going to pull up this here. Actually, go back to here. Let's see if I can make this even really wide. Yeah, this is exactly what you want. And so I'm making this super wide, everybody, in a 3-minute chart because I really want to emphasize my point here. When the market comes back to the VWAP, what you want to look for is, see how the selling started to step in here? That's these red candles here. Selling's coming in. Basically took out somewhere around 4,000 to 5,000 of the net cumulative delta for the day. This is the cumulative delta. Cumulative delta was just above 16,000. It got just below 12,000. What do I mean by that? It means that the net buying went from a positive 16 plus thousand buying net on the offer to net 11,500. So they took off somewhere around 4,000 to 5,000 contracts. And that means that sellers were hitting the bid versus buying the offer in this area. And when I see selling escalate down to a VWAP, and then you look at the VWAP right here, see on the VWAP, on the test, see everybody looks at a level and says, I want to buy the level right when it gets there. I like to wait to see what it does at the level to determine whether or not I want to buy it or not on a scalp. Because with a scalp, you've got to be a little bit more price sensitive because if you get in too early and it blips through and all of a sudden you get stopped out right away, shame on you, right? Because you're too anxious. But if you see how the market sets and comes in and makes a low and you watch order flow, and order flow was selling down to the VWAP, but then on the VWAP, the delta comes back in strong and they actually showed net growing back to the buy side. It tells you what? The reaction at the VWAP is good. So at that point, when two worlds collide, sellers from the highs down to the VWAP, buyers step back in. And if you remember my angst, it was about what, 5-6 minutes ago, whatever it was, I said, I'd be buying it right now. And the reason is because the reaction there, volume coincided with a level of price. So when we come down, the sellers took it to a point where no longer they were dominant. Selling, buyers stepped in. This bar to this bar, and I know it's really wide, these net sellers got taken right back out. The buyers came in and bought it right back with a smooth test of the VWAP. Now you can scalp off of here in this low and you use your standard deviations as targets. You can use them as targets, as trailed stops, however you want to go about it. The way that I do it is once it holds, I step in, I buy, stop below that low, look at where I'm long versus where I think it can go. And then I just use trailers. It gets to the standard deviation 1 out of half to 2/3. Watch to see how it reacts there. Buyers are still in control. Start to trail my stop. Look for 2 standard deviation, maybe even 3 standard deviation. And that's scalping with that trend because I'm not going to just buy it and sell it a million times. A scalp is like in, out of some, maybe you try to leave a trailer. That's what I try to do. Now, ultimately, I might get stopped out and it comes back to VWAP. Then I buy it again based upon the reaction and you keep doing it. And so I want to bring Mike back in because I went on a little tangent there, but I was very excited to show you guys, like, that's what I look for right there.
So Anthony, let's talk a little bit about the actual mechanics of placing the trade. So we see the idea. So we're going through the VWAP there. What are you thinking? How are you placing that trade? Is that a market order? Are you going to place it a little bit above the VWAP as a stop market? What's the mechanics of getting into that trade?
So what I'm trying to do is, actually, the bars are so wide. Let me just thin it out here a little bit. There we go. Okay. So my mechanics are this. When I see selling come in, right? And so the first thing you have to do is, everything is about the eye and the beauty of the beholder, right? The beauty is in the eye of the beholder. I'm probably just getting that wrong today. But the point of it is that when I look at these standard deviation lines, I'm not just buying them on the test. So the standard deviation lines on an uptrend, see how they're just chopping around them. The first thing I look at is man, they're not respecting the line. They're hitting line. They're going through it. They're going above it. They're back through it. They're back above it. And I'm just sitting here going, there's no way for me to manage risk here. The scenarios I look for scalps with size are when the market delta finally comes in against the trend and it goes to a point and I see that the low holds that level and the delta starts to shift. And you see that the sellers potentially are exhausted and the delta turned. So the mechanics are, once I see the selling stop, so let me even widen this out again, and the buyers step back in, what it's telling me is, in this moment, that's how I'm determining my entry. So in real life time as it's happening. And so maybe we get an opportunity to do that if they get down to 29 again. I don't know if it will, but when the market is selling into an area and the market comes off the area and you see that the delta went from negative to all of a sudden turning positive, at that point, they're unwinding it because the response was good. So I step in somewhere in this bar and I lean on that low. So the mechanics are I'm almost 100% in after that response. Now, if the response is it hits here and it's trickling around it, I'm not doing anything. But that's a good low. And what I mean by it's a good low is that because let me see, actually, maybe if I go to a 1 minute, this might help it. Yeah, and then wait for the delta to come in. Let's wait for the delta because this is important. Okay. So on the delta here, if you look at it here, let's widen this out. And let's go right here. So you see the selling coming in. And here it looks like it didn't totally test it. It looks a little different on the 3 minute. On this bar right here, once this green bar right here that you see starts to come in and this low is made from the previous bar, I step in. Pretty much 100% with my stop somewhere below here. And the reason is because you got the response you wanted. It basically tested it and it came off and buyers came in. So the sellers lost momentum, buyers come in at a point of interest. And so I step in.
Yeah, that makes sense. What's interesting there is you're in that intraday downturn, and then you see that green cumulative delta bar. And that kind of tells you, that's kind of your trigger that, okay, the buyers are coming back in now. Not guaranteed, of course, but at least that's a good indication for you.
Exactly. And if you look at it here, so some will say, well, why not buy it on this bar or why not buy it here? Because you don't have a point of interest. Even if you're scalping, you have to have a point of interest. Just because I see sellers come in here and a buyer here, there's no level here. This is why I like order flow VWAP and standard deviation lines, because at those points, it's a point of interest. So when the market keeps selling off, it gets to a point where now that VWAP is coinciding with volume. And a lot of times on trend days, and you guys, once again, this is not set in stone the way you do this. You might have support and resistance. You might have something else. But what I like about order flow VWAP and cumulative delta is because it's volume and price. And so when price comes down and then all of a sudden volume shifts at a point of interest, like a VWAP or a standard deviation line, that gives me a signal that the market respects that price. And at the end of the day, that's all I care about. Regardless of what that price is, the market respects it. And what else is interesting is here, look at the standard deviation lines as we go up. No doubt for me, if I step in here, I'm trimming some of my position off because I'm locking in profit. We're talking about scalping. And like I said, this is not the tick for tick, but I'm also looking at it going, what's happening at the standard deviation line up here? See, a little bit of sellers came in, but the market didn't move down much. And so once again, you look at it and go, wow, you got some sellers here, probably sellers like me who bought down here, but the market didn't move much. It didn't impact price. Look what happens. It starts getting above the standard deviation line, bang. All of the shorts that were back here get squeezed and potentially goes up to the 2 standard deviation line. And that's the type of thing you look for when you're scalping. You look for price reaction coinciding with volume. And it sounds kind of contradictory because I want to see selling into support that doesn't push through support. And I want to see selling at resistance that doesn't really push it much lower. And then the squeeze comes. And so you're actually looking for you're looking for the counterpart at first, selling into support. And then you're looking for buying to confirm following it to show that they're getting squeezed.
Yeah, that makes perfect sense. I will often use the VWAP as well, but I also like the pivot point. So if we get a pullback to a pivot point, R1, S1, that kind of thing, I think, and with that cumulative delta, I think that's that's a concept that I look at. But from the mechanical point of view here, again, going back to that for just a second. So let's say that you do take some profits at that first standard deviation line. Do you move your stop up to break even at that point, or do you leave your stop where it was?
Great point. So what I do, and what happens to me a lot, is I will keep my stop at that point because at this point I've taken my risk out of the trade. So for example, let's just say hypothetically I bought 10 E-minis here. Okay. Around this line, I'm going to be out of 6. So at that point, even if I were to get stopped out below the VWAP, the price distance from where I entered and the contract size still confirms that I will make money on the trade. So at that point, I keep it. Once it gets above the standard deviation line here, then I would move my stop to just below it, and I most likely would have been stopped out there. So I will watch from next level to next level to next level, right? And then I'll wait to see, okay, can we come back down to the VWAP? Will I buy it? And then I'll also say, as it keeps going forward, let's just say that we start stabilizing above the standard deviation 1 line, and we start holding that. And I see delta coming in selling that can't get below there. I step in here, use one of these lows, and I look for a 2 standard deviation line. So the trade keeps continuing. The thing with scalping is that I'm not going to try. I need to move my stop up because the next opportunity, I want to be able to reload. And also I don't want to give back that one look that I had. And so that's why I always say, if you have 10, you would take off 6. If you had 3, you take off 2. When you leave that 1, and at that 1 or that 4 that's remaining, a lot of times will teach you what's happening in this market environment. And ultimately, you'll squeeze a little bit more out of them. A lot of times you end up getting stopped out, maybe where you took them off or maybe worse, but that's okay. You're understanding the market action. And it also, I think, psychologically keeps me engaged because sometimes, Mike, I think we all can relate to this. When you're scalping, your tendency is to overtrade, not undertrade. And so what'll happen is if I take that full position off and the market goes higher, all of a sudden I make a mistake and I buy into a rally or I do something out of character. And so what I try to do is I always try to keep a small position on. So psychologically, I still stay engaged with the risk basically off the table. You still have risk in that existing position, but I'm keeping myself moving forward in P&L for the day.
Yeah, I mean, you're at that point, you're playing with the house's money anyway. You're looking for a big runner. It doesn't happen all the time, but getting that big runner on top of the scalping trades, I think that makes trading fun. Hitting those runners. And I really like the approach where you have that underlying bias. So basically, that underlying bias is keeping you honest and keeping you trading in the direction of the market. I think that is something that a lot of new traders don't get. They want to go long short, but they're not, and they're bucking the system, so to speak.
Yeah, typically when I'm scalping one direction for the day, unless the day dynamics change. We make a new low of the day. On a day like today, VWAP starts to get below opening price, delta's shifting, something changes. It does happen. But on a day like today, very seldom does an S&P turn from a trend up day to a trend down day. And so most likely, and you guys know just from even watching CNBC or watching the news from a glance, how often does the S&P go from up 20 or 30 or 40 to down 30 or 40? It doesn't happen often. And so therefore, those turnaround days, when they do become visible to you, then you shift gears. But if the market stays steady and things start to slow down midday, you don't want to be going against trend. You want to find the times where they're squeezed in trend.
Totally agree.
So you want to go to the SDYE?
Yes, let's do that.
All right. We got the SDYE question of the week. And so it says, would love to hear Anthony talk about how he goes about journaling as well as trade tracking and categorizing and reviewing of past trades. As a new trader, I often struggle finding a good way to track trades. And this is from Crypto Scroopy Noopers. And you have to follow NinjaTrader and hashtag AskDYE, and you will get some swag if you are in the US. And I appreciate this question. And when it comes to journaling, I think it's where you are in the phase of your career. For me personally, I journal differently now than I did at the beginning of my career. At the beginning of my career was almost solely about stats. Then psychology came into play. And at this point, I just extract my stats from whether it's NinjaTrader or Trade-of-8 to see how much I'm trading 1 month to the next. And I'll also just look at that in general. I don't really talk about the setups as much in my journaling. A lot of my journaling is where am I at in my head. And the one thing that I would say is this, and this is something that I'm going to be offering on Anthony Crudele very soon, is I do think that you need to have a journal that's written down. And I put down some key things that I'm going to let people see on anthonycrudele.com at some point, that I think that when you're journaling, it's important to use pen and paper when it comes to psychological things. And even when you begin the day, just to write down some things that you are looking at. And the reason is because when you go from pen to paper, and you can go from Linda Raschke to my buddy Pax to so many people I've talked to over the years that are friends of mine, they all use pen and paper. And the reason is because it just resonates differently with the brain. And so although you have these tools on Ninja and Trade-of-8 to be able to extract your data for your trades, so I think that there's another level of journaling that's important. And that goes to writing down what your thoughts are, and like I said, I'll list some stuff on anthonycrudele.com that I think are important. And so that's the way I do it. And I know the question was categorizing past trades. And I would just say the only way to do this, final things, I know we're running out of time, is when you're categorizing trades, I have multiple types of setups, right? And if the A setup for me is the one I just showed you. That's really my top setup. I like squeezes into VWAPs, or I like squeezes into standard deviation lines where delta comes against trend and they can't push through price. That's an A type setup for me. A B-type setup would be like very little delta, bought or scalped off of a VWAP line or a standard deviation line, or did something off of an opening range trade. And that's categorized different. So you have to have the number one look that you want, and then you have to categorize them in the order of importance to you. And to me, anytime I get off my marker, I only look for the A setups. I think that every strategy is going to have A, B, and potentially C setups. And so ultimately categorize the one trade, what I always call your money trade, your favorite trade, and then that's how I would go about it.
Excellent. Well, thank you, Anthony, very much. Great information again today. You can find Anthony Crudele on YouTube, Twitter, Instagram. How else can viewers keep the conversation going, Anthony?
Yeah, at Anthony Crudele on Twitter, anthonycrudele.com, and also placeyourtrades.com, where we talk about event contracts. We are using Trade-of-8 app on there, which is really cool. And final thing I want to show everybody is we had a huge response from the Gold CME challenge, and that was awesome if you followed along with that. And now you have the Currency Cup. CME is hosting the FX Trading Challenge from July 23rd to July 28, 2023. You can go and register at cmegroup.com. You can search for it on Google, or you can go into my YouTube description or go on anthonycrudele.com, where today's show will be listed for Develop Your Edge, and you will find the link there. These are always a lot of fun. Hope you guys go ahead and sign up for that CME Group Currency Cup. This should be interesting.
Yeah, that does those are fun, and definitely everybody should participate in that. It's a great way to learn about a different market. All right, Anthony, thanks so much for being with us. We'll see you again next week. Thanks everybody for joining. I'll be hosting Bars Closing a little bit later today. We'll see you then. Everybody have a great day in your trading. Thanks for joining.